4, 3, 2.
Good afternoon, everybody. I'm Jennifer Gerson, and I'm here today with Pam Mayers and Jamie Hinman. Welcome, everybody. Before we get started, I wanted to say happy Veterans Day and thank you to all those that have served and sacrificed for our country. Today is an important day, and we celebrate you today and we remember you today. So I'm Jennifer Gerson with the Pinecrest Business Association, and Pam is here representing the Palmetto Bay Business Association, and our friend Jamie is here joining us from Caliber Home Loans. So how are you today, Jamie?
I'm doing fantastic. Thank you all for having me here. I'd also like to say thank you to all of our service individuals and our veterans and have a very great Veterans Day. And thank you for everything that you've done for us, those that are here and those that are not. But I'm very, very excited to be here.
We're excited to have you. How are you doing today, Pam?
I'm doing great. And just full disclosure, Jamie is also president of my BNI, Referral Professionals. So I get to see him Friday mornings at 7 a.m. And he does a great job as BNI, which is another kind of referral type of business. A little bit more intense.
Thank you.
So Pam, I know Jamie gave us some questions to ask him today. Why don't you get started?
Okay, so I know Jamie very well, and he really has, and I'm a realtor, so I can tell people when they're passionate about their business or if they're just kind of bored or they're just going through the motions to make money, which makes everybody crazy. But he's in the mortgage business with Caliber Loans, and he's very passionate about it, and he doesn't really talk about, which I like, is the bottom line, making money, even though we are working, of course, to make money, but how he's helping people buy a house. And I also like Jamie because he's not so much like, I only do $1 million homes. You know, he helps all different price ranges. So I really love that too. But how did you evolve into being this kind of person who really is trying to help people find their dream homes?
Well, I got introduced to the mortgage business when I was young. I had a friend who was doing it, who was, showing me a few things, and I was interested in what he was doing. He was making a good living, and I started back in 1995 in the mortgage industry. So I've been doing mortgages now for over 20 years. And what I've learned in that process is that the feeling that you get when you help an individual begin their road to building wealth in America. So my rewards come from helping those individuals better themselves and their families down the road. At the end of the day, buying real estate, owning a home, maybe branching out and buying other properties is your first real step in America to building wealth. And that's what motivates me to help people. If you look at families and generations that have had homes passed down to each other, you'll see wealth being built up through those families. If you speak with some immigrants and stuff who've been here, 2 generations, they're just getting to the point where those grandparents are passing on that equity of a home or that money onto somebody else, and that's how you start building wealth in America, step 1. So I'm very fortunate to be able to help people do that.
What was your tagline that you used to always say, the dream maker?
Yeah,
the dream maker. Jamie the dream maker.
My tagline is I strive to help individuals achieve the American dream of home ownership one mortgage at a time.
Love that.
So I'm the dream maker.
And I know Caliber is quite a large mortgage company. They're the second largest in the nation?
Well, Caliber Home Loans is operating in all 50 states of the United States of America. And last year we were the second largest volume mortgage banker out there. So we are only specialized in doing residential home loans. We do not do any bank deposits, any type of commercial loans. We are a bank that specializes in nothing but residential home loans.
So you're experts at residential home loans.
We're experts at what we do.
So I would imagine that you have many different types of home loan programs for all different types of customers.
Absolutely. And we have a large portfolio of loans, which has unfortunately been frozen right now during COVID. But as soon as we get stuff back, we'll have a whole nother volume. But we do offer everything else that everyone else does. Conventional loans, FHA, VA, jumbos. Any of those things that you need, we can help you with. And with our knowledge and experience at Caliber, you're going to be with somebody who knows what they're doing, who's been doing it for a long time, and are going to give you the service that you deserve.
And being in Miami-Dade County, down here, I know we see a lot of lower income families that, are trying to strive for home ownership. Do you guys offer any type of programs for lower income?
So we do have programs, and we have first-time homebuyer programs. We offer down payment assistance programs, and that's really on a case-by-case basis. There are requirements that you need to meet to be able to be eligible for some of these programs, so it's not for everybody. The difficulty that we see here in Miami, a lot of times, it's not all the time, is that our price points are getting so high right now that to be able to afford the home that you want, you may not be able to really qualify for the down payment assistance programs that are available because
Right.
they're income related. Some are different than others. So it's a case-by-case basis. I'm not saying don't try, but it's out there, and we do them, we offer them, and we've helped a lot of families start building their wealth through these first-time homebuyer programs.
I think most of the people listening are like, okay, get to the nitty gritty. What are the interest rates? That's the nitty gritty. Tell me my interest rate. I know people.
Yeah.
So what determines a person's interest rate, and where do you see interest rates going? And what makes them go different places?
That is a question that I am asked on a regular basis. Most of my conversations start with, hey, what's your rate? Not, hey, Jamie, how are you? What's going on, man?
Where are the
How's
rates
life?"
at?
Nice to
Hey,
see you.
so-and-so referred me to you. What's your rate?
Yeah.
Oh, that's a really good question. You know what? It's not an easy one to answer. It takes reviewing information. So there are a lot of different factors that go into determining what an interest rate is for an individual. So when we qualify somebody for a loan, the basic things that we're looking at first is income, their assets, the amount of money that they have to be able to purchase, and their credit history. So your credit score has a lot to do with the interest rate. The type of property that you're buying, is it a condo, a townhouse, a single family residence? Is the property going to be a primary residence? Is it going to be a second home? Is it going to be an investment property? So there is no single one rate for one person. You can get pulled into it, but we need to sit down and analyze exactly what your situation is and what you can qualify for to determine what your interest rate's going to be. And we can work with you to get you into a better position rate-wise. If we notice some things that we can help you clean up on your creditor stuff, we can help you guide you to that point. So, I think that's one of the other topics. I'll roll right into it. And it's the most important thing about getting a mortgage is to start the process early. Don't go home shopping.
Don't find that house of your dreams and then expect to be able to get it
In
done.
20 years, I can't tell you how many times I've had that incredibly disappointing conversation with a client when they walk in and go, I'm under contract for $550, and I run the numbers and look at his returns and everything, and I unfortunately have to look him in the face and go, listen, you kind of overshot the moon. You only qualify for like $430.
Right.
And it's a big hit. Everybody gets very emotional when it comes to buying a home. It's a highly emotional transaction. And we always have to manage these emotions for our clients. And the easiest way to do that is if we start the process for the mortgage first. That way we set you up with the right expectations, your price point, and then you can fall in love with your favorite house at $430.
Of course. Well, as realtors, we see that from the other side too.
Yeah.
And,
Of course.
one of the first questions you want to ask them, what are you pre-qualified for? So we touched, and I heard you say the word credit. So where do people's credit scores need to be to qualify for a mortgage?
So we generally do loans for credit scores with a 620 credit score or higher. Now, we had some programs before that went lower, but they're on hold until we figure out COVID stuff, and we'll be back. And we had programs available for people who were just out of a bankruptcy. So there's options for individuals, and they're slowly starting to come back as we get our hands on the COVID situation. But 620 credit scores and above is where we're at Caliber Home Loans. And obviously, the higher your credit score, the better your
rate.
options are going to be and the rates are going to be. So that's where credit's really important. And one of the things with credit that you can work with is a big problem a lot of individuals have is they're maxed out on they don't have bad credit. They pay everything on time, but they're maxed out on
Their
credit
debt to
cards.
income doesn't fall into place.
Well, the balance ratios, so they're almost limited out on a lot of cards. I see a lot of people do that. And if you manage your debt on your credit cards, you'd be in a great position to get your rate much better. So we can easily bump up credit scores by paying down some balances and doing a few things like that. So those are things that you learn through experience. It's a knowledge you gain doing it for 20 years and how to best serve your clients.
Right. That's something that, from my credit union perspective that we always teach a lot of people. It's like, before you even, a year before you even start thinking about looking for a house, you got to look at your credit report and you got to figure out where you are, and you need to start working on that if you need to work on it, a good year before you even apply for the mortgage, and get all your ducks in a row. And it just makes the process so much smoother and easier. And then you don't fall into that emotional roller coaster where you find a house that you can't afford, and now you figured out you need to do this for your credit, and it just makes it so much more of a streamlined, easier process.
So that also brings up something, if I'll go off on this for a minute, but something that's really important, and a misconception that's out there, is that every time you get your credit pulled, it drops your credit score. So this is true in some areas. Credit cards, unsecured, if you go to Macy's and Target and to Old Navy and whatever and apply for all these credit cards, that's going to bring down your credit score. But if you go to 3 mortgage companies and get your credit pulled by 3 different mortgage companies within a certain amount of time, 45 to 60 days, it does not affect your credit score. That's the biggest objection that I get from most clients to starting early, right? They don't want to start early because, I don't want you to pull my credit. And they don't understand that by doing so, I'm helping to set them up for success in the future.
Yes, yeah, absolutely.
So it's something that I like to get out there, that it's a misnomer. And if you go out there and you look, you can go right onto Google and Google, how do mortgage inquiries affect my credit score? And you'll find it right there, written in black and white. The Google machine's pretty powerful.
Yes, it is. I don't know what we ever did without it.
Yeah, that's right.
We struggled.
That and Google Maps.
Yeah, Google Maps. Oh my gosh. But so when people are getting organized, and I'm a realtor where people call me that night and say, Pam, they call me at 8:30 in the morning and they want to see it at 8:30 at night and put an offer on that day. And I'm like, are you pre-qualified? And they're like, oh, I've talked to somebody. I'm like, but I need it in writing. Like, right. I need it hard in the writing. And I'm wondering if you could give any tips to help credit, because I'm getting a loan in North Carolina, my house up there, and I know we knew we wanted to do it by the end of the year, so we started. My husband's like, you can't buy anything. That was his excuse when he spent money, but okay. Also getting the ratio, like somebody told us, get your ratio, like if you're going to use a credit card, don't go 30% over, let's say, on any of creded cards, because that's a hit. Balances, right?
Exactly.
So so I called all my credit cards and I figured out, got them down. I paid some off, obviously, but I got everything down to under 30. But still, it takes how many days to get? It doesn't just happen the next day. Your credit score goes up. It takes 30 or 60 days or.
Yes, if you do it through. So we have the ability to do credit rescores with loans that are in process with our credit reporting companies. Okay. So in a situation like that where we're trying to get the credit score up, we could do it within a transaction. But typically, yes, if you're doing it on your own, you're trying to maintain your credit, you're keeping an eye on your stuff, and you want to maintain your credit score high, make sure that if you have a $1,000 limit on your card, your balance isn't greater than $300, right? That 30 to 50% balance to limit ratio is what really maximizes your credit score. Any recent late payments is going to kill your credit score, and that's a really hard one to work around, right?
Really? Gosh.
Stuff that's on there that's really late, you may be able to work with a little bit easier than things that are really recent. You know, it's hard to argue a recent situation if it really happened.
Right.
Okay?
I mean, what's a day?
It's
a day, yeah.
Yeah.
A day is a day.
They have to report you, or does it automatically report you if you're a
every
day
month?
late?
The credit reporting agencies, like whatever, Caliber Home Loans services 90% of all the loans that we originate, or something like that. We service an unbelievable amount of the loans that we originate. All right. But at the end of every month, we report to the credit agencies who paid and who didn't pay. And if you didn't pay, it goes out. And if there was a mistake or something, any servicer will clear it up for you if there's, a reason or something, or maybe there was a mistake by the servicer, a payment was lost, blah, blah, blah. But if you really miss a payment and it was an honest mistake, you still went 30 days late. There's not much we can do about that.
Right, of course.
So prepping for a mortgage or getting an application or getting pre-approved, I can pre-approve somebody in 30 minutes, really. So it's just really taking the time to take that one extra step. So it doesn't mean if you get that call at 8:30 and you pass him over to me at 9, by 9:30 he'll be ready to go make that offer at 8:30 at night. But if you go and show him that house and he finds out he can't qualify for the mortgage that he wants, now we're dealing with an unhappy client. So it's really important to stick to the steps that provide the most success, right? That's what they depend, and that's what they lean on us for. Most of my clients haven't bought a home before, or they've bought it before and been through different experiences and stuff like that. And, one of the things that I always talk about is when you're purchasing a home and you're going into a mortgage, it's one of the biggest, financial responsibilities that you're getting into. You want to have all the advice and information that you can in front of you to make a good decision. So sometimes I tell people that advice over price, right? We may be able to get you to the same place by showing you how we can work with a loan, the term of the loans, the amount of down payment. You can work with mortgage insurance where you don't have to put 20% down. There are other options. So working with someone who is knowledgeable and understands the business and understands how it works is key to a great success. Now, granted, there's some cookie cutter deals out there that anybody's going to walk into anywhere and get a loan, but a lot more of the transactions have some work that needs to be done to be able to get it done and done right.
So we have a question from a viewer. Hi, George Gonzalez. He actually has a few questions up here. He wants to know, how painful is it to refinance a house right now? And is there a lot of paperwork, and what kind of closing costs are involved?
So the digital age has been fantastic. So we have the ability to streamline some things for some individuals, and for some it won't. So if you're a W-2 employee working for a large corporation and you do an application with us, we have the ability to digitally verify your employment and income. So that cuts out pay stubs, tax returns, W-2s, and all of that. And if you give us authorization to check your bank account, we can verify your assets to make sure you have enough reserves and or whatever. In that situation, paperwork-wise, it's not an issue. It's quick. Now, the realization of where we are today with such low rates and an incredibly hot real estate market is that we're overwhelmed with the amount of work that we have. So the pain is how long it may take you to get to closing on a refinance.
That was my next question. How long does it take?
On a refinance, about 45 to 60 days, because you're home. You live in that place. You're not under contract with an expected closing date. We're going to lock in your rate, and everything that we talk about will be guaranteed. But if we get a lot of purchase business that has a 30-day closing on that contract, those transactions take priority. So we have to funnel the refis through. So paperwork-wise, isn't very painful. You may have to wait a little bit longer than normal because of the situation that we're in. But typically, we do them both within 30 to 45 days if everything was perfect and we weren't where we are today. But yeah, shouldn't be too difficult. And even if you're self-employed, if you have your tax returns available and you get them over to me, I go through them, research them, come up with your income, calculate everything, and get you pre-approved, and then you're on your way.
And can't they put the closing cost into the house? Like, if you're refinancing, refinancing, it's different. Like when I have a customer come buy a house, I'll always remind them, you have to put 3.5%, 5% down. But remember, you're going to have 3% to 4% in closing costs. But
Correct.
I think when you refinance, like George wants to do, his closing costs can get put in, right?
Correct. So and I haven't thought about this, but yes, typically 9 out of 10 times when we do a refinance, the closing costs are incorporated into the loan. So your loan payoff is $250,000 and your closing costs are $6,000. You get a loan for $256,000. Right. And you walk away, you sign, and you don't come to the table with any money.
Right. I think really the only cash out of pocket would be for an appraisal, right? For a refi,
Correct.
Which is about $450 in this
how much it
market,
is.
right?
Good job. So that's exactly it. So, and another thing that you need to be aware of, rates are as low as we've ever seen them. Take advantage of the low rate. And we can explore these options at any time, but a lot of people also get caught up with no closing costs, which we can do that too, but nothing in America is ever free, right? So
you're paying for it regardless.
You're paying for no closing costs by getting a higher interest rate. Might be it might be 0.5% higher, maybe 0.3% higher. But if you're looking at a 30-year loan and you're looking at $6,000 of closing costs out of pocket, or an extra $32,000 in interest over the life of the loan because you save $6,000 that you can finance, you have to make the decision. And what I do is I provide a breakdown of those options and how they affect you on a short-term and long-term basis. So maybe somebody's in the house and they just want to lower their payments and they know they're only going to be there for 5 years. Then roll in the closing costs and then get the little bit higher rate and get the closing costs. But you have to be working with somebody who can ask you the right questions to ascertain what's most important to you and what helps you back onto building that wealth. Because that's why we do this. We all have to pay for a place to live. You might as well pay yourself as opposed to help build somebody else's wealth.
So speaking of a hot market, right? Because Miami is a super hot market in real estate right now, and interest rates. So how long do you see interest rates staying as low as they are?
So my indicators and what I read and what I see, I think they project it out for the next year or so. You know,
Do you think they'll go even lower?
No, I think we hit a big low right after COVID hit, and there was a lot of
In about
turmoil
April, yes.
in the bond market. It was one of the questions that you asked. What dictates mortgage rates outside? So there's U.S. mortgage-backed securities and the 10-year Treasury bond are the two indices that you can check online to show what's going on in the market. As those move, interest rates move, okay? But everything that I read is that we're going to keep the rates low. We're not looking at raising rates anytime soon. And with COVID being the way that it is, until we get that kind of straightened out, we need a lot of help. So I see rates staying relatively low. I don't know if they're going to be in 2 and these ones that we saw for a little bit there. But I think we'll bounce in and out of the high 2s and low 3s for the next foreseeable future.
And you know what I learned recently, because I was refinancing, and it was an investment house or a rental property. So I was paying the top loan, the interest rates. So my husband's like, oh, the rates are under 2%. Can't you get a 1.75? And I'm like, Randy, it was interesting. And it's hard with COVID because things change. Like we wanted to get a home equity loan, and we were thinking, oh, that's easy. It's only $100, but a lot of the home equity loans are like 5%, and we're like, why would we get a 5% loan? Are you crazy?
Right.
So, but then we learned that the other one, so we ended up getting like a 3.6% investment property, which I think is
great.
Good. But my husband still was like, no, we should be like around 2%. But people don't realize what you're buying dictates the loan. And
the type of occupancy. That's called occupancy. It's an investor
it's not
property. Well, it's all risk-based lending, right?
Right.
If you have 2 properties, an investment property and a primary residence, and you've run into financial hard times, which is the first one you're not going to pay?
Right.
Yeah, of course, your investment property.
Right? So that is taken into account. Now, your primary residence gets a better rate because you need to keep a roof over your head. Right, so these things are kind of, and it's. I'm breaking it down to being really simple, but that's basically what it is that you're looking at: level of risk per transaction and per loan situation. So a larger down payment will offset that, sometimes. And there's things that you can do that we can look at.
We weren't asking for a huge amount. We were just asking for like 50%. So 50%, I'm like, but you know what was awful? It's up in the mountains of North Carolina, but they can't find an appraisal person up there. They wanted $1,200.
What?
To do an appraisal.
Wow.
And of course, we were like, no, I think it's time to regroup. I was thinking $450. We paid.
Yeah, because you're used to that here.
Yeah,
I'm used to it here. We paid $750. My husband goes, how did $750 come on your credit card? I'm like, guess it must have been the appraisal. And then the mortgage guy goes, oh, it's $1,250 because of what?
Yeah.
I think we need to go start to doing appraisals in North Carolina.
I was just thinking, how many appraisers are watching this right now and want to move to North Carolina? Because $1,200 is a lot better than the $450.
And yeah, they're making it sound difficult, and it's not a difficult house. And so, so anyway, I think the whole business has got on fire. That there have some people, I think, taking advantage, and the banks are doing the best they can to keep up, but they can't. Like it's going to take me 60 days to close. And
it's like I said, for a refinance, 45 to 60 days. It's really about 60 days. And what happens is the more simple the file is. If somebody wants to refinance, that I can do what's called that first day one certainty, where I can verify everything digitally. That's a much easier file to underwrite than somebody's file that needs to go through 2 years tax returns, pay stubs, make sure everything's there. When everything's digital, Fannie and Freddie are basically backing it at that point in time.
Right.
So it's really easy to get it through, and that refi might close in 35 days. But if we have to go through, tax returns and everything else, it might go a little bit longer. And we also have to see the turn times on appraisals, because the appraisers are slammed, right? They're doing a bunch of purchase appraisals and an unbelievable amount of refi appraisals. So the appraisals are taking 7 to 12 days to get done sometimes too. So.
And I can't get mine done in a month.
Right, I know.
So I'm like,
Well,
but
you're
another
in the
thing
mountains.
is,
I guess it's and I've been there. It can't be
geez.
that hard to get there.
And it's in Boone, but anyway, it's in a big college town, but a big football town. Yeah. But anyway, when people talk to me, I know about buying a house. They're like, "What's the bottom what's the least I can put down? Let's somebody's a first time buyer and they're in their 30s and they're like, what's the least I can put down? So
Listen, you can buy a house with as little as 3% down. So that's another myth buster that I would like to address too, right? You do not need 20% down as a down payment to be able to purchase a property. You can buy it with as little as 3% on a conventional program, 3.5% on an FHA program. And the only time you need 20% down is when you're looking at, multi-million-dollar homes and you're looking at jumbo loans where you have to put down.
And what's the break? That's
$510,000 is the break point from conventional to jumbo. So if you need to borrow $511,000, that is now considered a jumbo loan. But not to bore you with a bunch of details. So if you're buying up to $1 million home, you could do a first and a second mortgage. We call it a piggyback loan. Mm-hmm. And you could buy it with 5 or 10% down. Is it 10%? Let me not say 5%. It's 10% down. So that saves you another, on a $100,000 home. On a $1 million home, it's $100,000.
Yeah.
That it saves you. So that's a big deal. So if you need money to fix up, you're buying that house. It still needs work and you want to do stuff. That's a great way to keep an extra $100,000 in your pocket that you wouldn't have to put down.
But
situational.
From what I understand, and I could be wrong, is that if you put down less than 20%, then you have to pay PMI, which is mortgage. I don't know what the P is for.
Private mortgage insurance.
Okay. So then you have to pay that. And it used to be that I used to tell my customer, well, when the prices go up, get another appraisal and you can get rid of PMI. But I think, can you get rid of PMI, or they change those laws where you can't get rid of it?
That's a really good question, and it's a program-specific situation. So conventional loans, Fannie and Freddie Mac, for those who have heard that, are only up until it automatically comes off when the property hits 78% loan-to-value from the purchase price.
Okay.
With your reduction in principal.
Right.
And stuff like that with every payment.
Right.
But if you're in an area like we are now in Miami, which the last few months we're seeing properties go for over asking price regularly, not every once in a while, like almost every transaction right now is going in for over asking price, our values are starting to boom again. So you might have bought a house 3 years ago with 5% down, and you may be able to get that mortgage insurance removed. You have to call Pam. Or someone that can do a property search and give you an idea what the value of your home is. And if you think it's there, you call your servicer and you ask them to send somebody out to do an evaluation of the value of your property. And if it comes in at less than 78% or whatever it is, then they automatically remove that. And you pay for an appraisal. I did it on my house before the rates dropped because I had bought my house 4 years ago, and last year I had enough equity and I paid, I think, $300 to have somebody come out, evaluate the value of the property. It made it, and they removed my mortgage insurance, and I was paying over $200 a month in mortgage insurance.
Yeah, I bet that does.
And that's $2,500 a year.
Yeah, but I made that up in equity.
Of course.
So you pay the mortgage insurance is like that good evil, right? Like, nobody wants to pay it because there's not really a lot of value to it, but the value comes in the ability to buy a home with less than 20% down and be able to gain the appreciation in that home, which is what I did. So I paid the money because I didn't have enough to buy it, and I didn't lose out on the equity that built up in those few years that I had it, and then I just removed it. So there's ways around it. There's ways around the mortgage insurance from the beginning. You can do another one of these piggyback loans if it's a big deal. So I have software and stuff that I work with, and it's called Total Cost Analysis. And one of the templates that I use is how to manage mortgage insurance. Right, I give you an example with a straight loan with mortgage insurance. Then we do another option where you can pay a premium on the side to remove the mortgage insurance, which is a lot less than the 20% down. We'll do a piggyback loan, and you can do lender-paid mortgage insurance where you take a higher interest rate because the interest that you pay on a mortgage is deductible, right? And you take a higher interest rate, and we can look at them all. So that's what really separates me, I think, from a lot of my competition and other loan officers out here is that I embrace technology that helps me share mortgage programs, how they work in and out, the ins and outs of them, so buyers and borrowers can make really good, educated decisions on what the best mortgage program it is for them. And there really are many. You may call a loan officer and say, we got to see which mortgage program it is that's best for you. And they always come back and they give you a 30-year fixed.
Right.
Every single time. You think that that's the only mortgage program that's available. Well, there's a lot of ways to get a mortgage done.
Of course. And you're local, which is why
I'm local. It's my cell phone number that people call. I'm always available,
And, the reason why Pam and I bring on, the people that we bring on is because we want people to do business with local people. And I wanted to wrap this up with community and how we all know each other. We all know each other from the Pinecrest Business Association and the Palmetto Bay Business Association.
That's right.
And I know you're president of your BNI chapter. So tell us a little bit about how you're involved in the community. And I'm probably only hit the top of the haystack there
Sure.
with things that you're involved in.
Well, I think that giving back to the community and being part of the community is a necessity. It's one, to be able to build your business, but two, it's nice to help those who are helping you be successful as well. And if I can do anything in the community, that's always a plus. So I've taken on, several different roles within different organizations. BNI is one that I've been in and out of for many, many years. I'm the president of my organization right now, of our chapter. There's like 20-something chapters in Miami. And I've been president there for a few months. So these really fun shift of times on how you run meetings, but we've done a really good job. I've been on the board with the Pinecrest Business Association for several years as well, which we do a lot of community outreach stuff in there. We do toy drives and we do things to help our community. I was part of the Palmetto Bay Association. I was a member there for a long time. I've done a lot of chamber events, and it's networking, but you're building relationships with individuals who make a difference in your community.
Absolutely. That's so well said.
And you know what? I think I tell my customers a lot of many times, and even my husband was one of them, that I want to deal with somebody you physically can go to. Like when I have customers, Pam, how about this loan company or that? I'm like, no, I don't want you to deal with an internet person. I want you to deal with a real person you can talk to. You know where he lives, that you can get back to you, because this is your money and this is a big deal. The deal, people don't realize when they go to close, they just can't pull out of a contract for any reason. You have your commitment date. So you have your inspection date, you can cancel for any reason. But the next date after that is the commitment date, which is really important, your loan commitment. And your mortgage guy has to have the loan finished and done and you be approved. Otherwise, you lose your deposit. So that's a serious thing. That should be your new BFF, is your mortgage guy.
Should be,
he's
right?
controlling your funds and being qualified and not losing them. And they've tightened the contracts. So it used to be before they gave you a commitment letter, and if there was something in there was a way to get out. But no, it's after that time, honey, it's done. 30 and it's 30 days in the contract. When I write contracts, I try to give more, because my mortgage people are like, oh, Pam, just give me a little bit more, a little extra time.
Well, now we ask for a little bit more because of
the circumstances, of course.
But you know what? We're coming with commitment letters within 30 days. We may not get it to closing within 30 days, but we can get the commitment letter within that time.
Yeah. And you know what? Let's say something happens and you're slow to something and you don't have the commitment letter, then you can ask for an extension.
Correct.
Of that commitment date. And a good realtor will.
You can ask for an extension on the inspections. You can do it on the commitment letter.
There's a lot you can do. So
else.
I think when you do a contract, it's really important to sit down and I think it's really important to tell your mortgage guy. Maybe your realtor does or doesn't, but tell the mortgage guy, hey, this is my commitment date, and whatever I need. Yeah,
that sales contract is not buyer friendly. It's not, because when they've changed it, they've put the buyer's feet to the fire even more.
Of course.
Because it's easier now for the buyer to lose their deposit.
Yes.
And if you're not working with a professional mortgage person who doesn't know what they're doing or doesn't follow dates or doesn't have a system in place, you could easily find yourself losing $10,000, $15,000,
in a bad situation.
Yes.
Yeah.
I mean, price point of homes you're dealing with, your average deposit is probably about $30,000.
Oh yeah. Yeah.
$20,000.
Much more, yeah.
Right.
More, so, but you don't want to lose. You don't want somebody to lose
$5,000.
Yeah.
I'm just the initial deposit on a contract, right? And then one of the questions that we had is, what is my average loan amounts and stuff? I'm anywhere between. I've done several loans under $100,000 in the last few months.
Wow.
To multi-million-dollar loans. I'm here to service everybody, but my bread and butter is somewhere between $200,000 to $700,000. That's where I get a lot of my business from.
Which is good to know, because I think some people don't want to do this and people sometimes feel like, oh, I don't know if you want to fool with this because it's this or that, but of course you want to help everybody. And I find some of my best clients are the ones who started buying 100, 125, 175. I have one client who almost buys once a year, and I met him, I just met him. I think it was a lead off Zillow or something a million years ago. And it was
Before we wrap up, George has one more question. He says he has 2 investment properties with low balances and plenty of equity in his homestead property. So what do you recommend for him to do?
To give me a call and let's go over the situations together.
Yeah, you need details.
Yeah,
so
it's
you can either, George, you could leave your contact information in the comments and Jamie will reach out to you, or Jamie's contact. We can put Jamie's contact information in the in the comments as well, so you can reach out to him. But thank you, everybody. This was a great, interesting conversation, and I enjoyed it.
And this is really the way it goes. This is really, I feel like, a very meaty conversation for people. And it's something that can influence you, again, financially the rest of your life. You should be educated. Everybody makes money off you when you buy a house. You had better be educated.
You better be educated.
In the process. You need to be educated in the home buying process. You need to be educated if you're refinancing in the refinance process. And you really need to do business with people that know what they're doing.
Absolutely. And
look out for you.
So if you're looking for a mortgage, contact Jamie. If you're looking to buy or sell, contact Pam or myself. We'll be happy to help you. We'll be happy to work together and help you. Thank you, everybody, for watching. Have a great Wednesday night. Thank you to the Miller Brothers for hosting us in the Community Newspaper Live. And thank you to Tommy for your patience with us. Have a great night, everybody. Good night.
Bye-bye.
See you later. Thank you.
Bye.